Hello everybody, welcome to Monday Morning Must-Knows. My name is Merlin Rothfield. Here are let's make it four things for the upcoming trading week to pay attention to. Now, of course, over the last 8 months of this program, we've been talking about inflation. Now, clearly inflation is starting to become a much bigger problem in the eyes of the Fed. We're starting to see much higher prices across the board, and that could have an impact on our economy. So let's take a look at what's happening on Wednesday at 8:30 a.m. Eastern Standard Time. We start things off with the Consumer Price Index numbers. This means, what does it cost you and I, the consumer, to buy specific goods and services? Now, on the right-hand side of that chart, you can see an extremely elevated level of Consumer Price Index numbers. Of course, looking back here, going all the way to 2014. If those numbers continue to spike up, that could put more pressure on the Fed. And we'll talk more about that in a second, because not only do we have CPI on Wednesday, but on Thursday we have PPI, which is the Producers Price Index, also at 8:30 a.m. Eastern Standard Time. And on the right-hand side, notice a slightly different picture. While it's elevated given the historical chart you see here, it's nowhere near as elevated as Consumer Price Index. So we have a math problem in this situation. The math problem is producers make the goods and services that you and I buy. If the cost of those goods and services are rising significantly for the producers, they're going to do what? They're going to pass it on to you and me, which means that CPI numbers rise as well. But we're seeing PPI numbers actually decline a little bit. So what gives? Does that mean the cost of goods and services are cheaper to make? Does that mean that our CPI numbers will drop? If that does happen, that means inflation's impact might be a little less than expected. And one thing to pay attention to in the markets, we talk about this all the time at Online Trading Academy, is the markets will generally do what most people least expect it to do. Right now, everyone is on the bandwagon of inflation, how high it's going to get and what the Fed has to do. Raise interest rates, raise. Well, if all of a sudden we get these inflation numbers a bit lower, it might ease some of that and add a little relief rally to this market. So pay attention to those numbers coming out Wednesday and Thursday. Now, another piece that's important is talking about spending. What are you and I buying? Retail sales, right? We just had the holiday spending spree, right? So probably still paying off those credit cards. Might take a few more months for that. But the retail sales numbers come out as well. That's going to be on Friday at 8:30 a.m. Eastern Standard Time. Now, if we look at this chart, I want you to notice the volatility that's happened. And this, of course, is just the most recent, year and a half. You see a lot of big swings. And the number that we're at right now is 0.3% on the most recent reading of retail sales, which was lower than expectations, and that's that hard red edge. Now, when you zoom out and I show you the bigger picture, this is kind of showing you more historical norms. I wanted to show you what's average, because COVID clearly has left a dramatic swing in retail sales numbers. Here is where we are with that red line. So we are definitely much lower than historical norms. And this is of interest to me because we have pumped in nearly $17 trillion into the economy in a 2-year window of time. That amount of money should have led to greater retail sales, greater production, right? All those types of things should have spiked. But we're only at 0.3%, especially coming off the holiday spending spree. So that's not a very good sign for the market. Of course, the expectation is going to be a little bit of a bump in our numbers for the December result. But we'll have to wait and see with those numbers on Friday. That could add a nice little pop to the markets. Not necessarily, when I say pop, doesn't mean up or down. It means volatility could present itself off this announcement if they are worse than expected. Now, the final thing, it's earnings. And I'm going to bring up the calendar here, and you're going to go, what, Merlin, you're boring me. Look, there's only just a few companies here. There's only 36? Snooze fest. Well, trust me, this is one of the most exciting earnings weeks for a specific reason, and it all starts not on Monday. For you cannabis groupies, we've got Tilray reporting on Monday. Tuesday, nothing. On Wednesday, you've got KB Homes, Infosys, and IHS Markit. On Thursday, you've got Delta Airlines and Taiwan Semiconductor. And then, drum roll please, Friday is the motherlode, the deluge of financial stocks. JP Morgan, Citibank, Wells Fargo, Blackrock, and First Republic Bank. Oh, the money will be flowing. It's earnings season is back. No longer will we be talking about 36 companies. It's going to be hundreds of companies reporting earnings. So buckle up, get ready. Earnings season is about to kick off. And that means a lot more volatility, because a lot of people are focusing on corporate earnings as the driver for this market to new all-time highs. Well, if that doesn't happen, we might see some market sell-off. If it does happen, we see market rallies. The best part about all this is, as educated traders, we position ourselves to accommodate for whatever the market gives us. That, my friends, is your Monday Morning Must-Knows. We'll see you next week.